tastes like sold. Remax. I'm just kidding. It's empty. It's a prop. All right, February 2023 Ottawa real estate market update. Now, if you've seen these updates before, you know that I always start off with my trusty cheat sheet. I'll read you through some of the important stats from January 2023, and then I will give you my own personal interpretation of what we're seeing in the market and what it means to you if you're a buyer, seller, investor. Quick disclaimer about the stats that I'm gonna give you. We just pulled them on February 1st around 11 a.m. There are always a few sales that trickle in late, and so if you see an update from another realtor or you see from the Ottawa board, the numbers that they put out may be slightly different depending on when they pull the reports. Don't at me in the comments. All right, so January 2023, we saw a total of 610 sales in Ottawa. Out of those 610, 462 were freehold properties. That's about 50% fewer freehold homes than we sold in January 2022. And it's actually the lowest number of freehold homes sold in Ottawa since the year 2009. So extremely low sales numbers. However, if you look at the distribution of sales over the last few months in Ottawa, that distribution is actually starting to look like a normal distribution for a balanced market. So things seem like they're starting to normalize. The average price of a freehold home sold last month was about $676,000. That's 12.8% lower than January of last year of 2022. However, January 2022 was literally one of the 5 highest months ever for Ottawa real estate. In more recent times, we've really seen prices stabilize since about August, and they've basically been flat since October. A few other stats about the freehold market. On average, freehold properties that sold took 43 days to sell, and they sold for 97.3% of the list price. Those are stats that are right where we'd expect them to be in a balanced market. In a balanced market, typical property takes about 60 days to sell, plus or minus 15, a little longer for higher priced or atypical properties. And they typically sell for 97 to 98% of the list price. So we're right where we'd expect to be in a balanced market. We're also sitting on 3.8 months of inventory right now when it comes to freehold properties. If you remember, inventory is a measure of supply and demand. When I say 3.8 months of inventory, it means that it would take about 3.8 months to sell through all of the active listings right now based on the recent pace of the market. 3.8 months is also right where you'd expect to be in a balanced market. Now let's talk about condos. We sold 148 condos total last month, also about 50% lower than January of 2022. It's the lowest January sales total for condos since 2017. So not quite as bad as freehold, but still a fairly low sales total. The average sale price of a condo in January is about $412,000. It's about 10% lower than January of last year. Again, January last year of 2022 was a crazy month. And condo average sale prices have also been pretty stable, really since about the month of June. We've seen them, they vary more because we sell fewer condos, but since June, the average sale price of a condo has basically been somewhere in the low 400s. Some months it's 415, some months it's 440, but it's in that range. They stayed to a fairly tight range. Condos took about 47 days to sell on average, and they sold for about 97.4% of the list price. So really similar to freehold. We're seeing the freehold market and the condo market really sort of move in lockstep as of late. We're sitting on 3.9 months of inventory for condos. So again, basically the same as freehold. So that does it for the stats. Get rid of this now. Production value. All right, so here is what it all means. Still empty. So the other bit of important news in real estate is that the Bank of Canada raised interest rates once again last week, this time by 0.25%. Now we did a whole video, it's on our YouTube channel, it's on our Instagram channel about that interest rate hike specifically. So if you're curious, you want to know a little bit more about that, feel free to go check that out. For the purpose of this, I won't rehash all of that, but suffice it to say that in spite of the fact that the bank raised rates for the 8th consecutive time, there was also a lot of positives in the announcement. The big one being that the bank has announced that for now they are putting a freeze on these interest rate hikes, and the intention is for this to be the last interest rate hike in a while. So we've seen prices stabilize over the last few months. We've seen inventory levels stabilize over the last few months. Interest rates were really the last missing piece, and now it looks like, according to the Bank of Canada, interest rates will also remain stable. Now, the biggest takeaway for me personally, the most interesting thing in the stats for the last few months, not just January, is the fact that inventory levels have remained stable, and they've actually remained relatively low. Again, we're in balanced market territory, but we've stayed firmly in the sort of lower range of what you'd expect to see in a balanced market when it comes to inventory. The reason I actually find it somewhat surprising is we've seen record low sales volume in the last few months, right? We've seen 10-year lows in the number of sales really now for the last 2 or 3 months. And so if you had told me that we were going to sell so few properties, I would have assumed, and I think many would have as well, that inventory was just going to skyrocket, right? And that we may find ourselves in a buyer's market. But what we're seeing is that is not the case. Inventory is remaining stable, and a big part of the reason for that is that we're seeing less and less new builds right now. There are a lot of builders who have either paused or outright canceled development projects. They are having a hard time keeping up with pricing, right? As prices have come down, builders have had a hard time keeping up because the cost of materials and labor and interest rates are still very high, right? So they're opting to cancel or pause some of these developments, which is putting further constraints on our overall supply. We're also expecting to see record levels of immigration in Canada this year, which again is going to be it's going to be likely concentrated around the big cities, Ottawa being one of them, and that's going to also further constrain our overall housing supply. So taking a step back, looking at the big picture over the last few months, I think that with inventory levels, prices, and now finally interest rates having stabilized, in addition to the Bank of Canada signaling that they hope to start bringing interest rates down at some point in the next 12 to 24 months, it's not unreasonable to think that we may very well have found the bottom when it comes to real estate prices in Ottawa. I also think that the Bank of Canada's latest announcement may actually spur a lot of buyers to enter the market. A lot of buyers who had been sitting on the sidelines, who were waiting for things to stabilize, may now decide that this is the time to enter the market. I'm not expecting a big year in 2023 in terms of sale volume. I think it'll be fairly flat. However, I wouldn't be surprised to see a bit of an uptick in the spring. I certainly think sales volume will go up in the spring. Not exactly a bold prediction to say that we're likely going to sell more properties in the spring than in the winter. That's literally every year in real estate. But when we enter these periods of balanced markets and high stability, sales become more weather dependent than ever. And that's just because there's no urgency on the part of sellers or buyers. And so rather than list or start shopping when the weather is miserable, they choose to wait till it gets a little nicer out. So what does it all mean if you're a buyer, seller, or investor in this market? How do you navigate this market right now? So let's start with sellers. As a seller, the good news in this market is because of the low inventory levels and this renewed stability, your property will sell provided that you execute your listing properly. That means you have to be on point with your pricing. Gone are the days where you can just throw any number, any crazy number on a property, and if you price it too low, the market just fixes it for you because you get a bidding war, and if you price it too high, probably doesn't really matter because it only takes a couple weeks for the market to catch up to your price and your property sells anyways, right? I get a lot of sellers who ask me, well, can't I just price it really high and then just negotiate down? The answer usually is no, because what happens if you overprice in this market, especially if you have a property that is fairly common, is that when you overprice it, you're really just helping your neighbors sell. You're not going to get a chance to negotiate your price because buyers aren't going to come see your property, or they're going to come see your property and then they're going to see better value elsewhere because of your high list price and they're going to go offer elsewhere. So it's incredibly important. The good inventory that is well priced is selling. The stuff that's overpriced, the stuff that presents poorly, doesn't show well, that isn't positioned well, that's not properly marketed, is likely to just sit in this market. And for buyers and investors, the fact that we've seen interest rates stabilize along with prices and inventory levels, to me means that it's a good time to enter the market with confidence. You don't have to worry as much as you might have a few months ago about prices taking a big drop, right? And the other thing, to be honest, is if things play out the way that a lot of the top economists are predicting over the next couple of years, and the way that, quite frankly, the Bank of Canada hopes it will, and that means that interest rates start coming down in 2024, I think it's very safe to say that we'll see real estate prices shoot right back up. And so if you're a buyer, it's very possible that in 10, 20 years, we look back on 2023 and think about it as one of the better periods to have purchased real estate in Ottawa. Remember that your interest rate also is not forever, right? So if you buy a property today, you get a mortgage rate and the rates come down in a year or two, to me, you kind of win twice. You win once because the value of your property is very, very likely to increase sharply as a result of the interest rates coming down. And you also have the option of either refinancing or breaking your mortgage and benefiting from those lower interest rates, right? So you lower your monthly payment and you benefit from some appreciation. I think one of the big takeaways for buyers today is try to choose a mortgage product that has some flexibility built into it. I would not be locking in for 5 years I'd be looking for something that was a little shorter term. And again, that gave me some flexibility so that if everything that we're predicting is going to happen in the next 2 years does happen and rates come down, you have the flexibility of switching to a lower interest rate mortgage without paying high penalties. Now, of course, this is all fairly general information. If you're still unsure about how to navigate this market based on your set of circumstances, I'm more than happy to have a strategy call with you, learn a little bit about your situation and come up with a game plan for you specifically. So feel free to reach out and book a time for us to chat. That about does it for this month. I hope you found the update helpful. If you did, don't forget to like and subscribe. I'm Serge Papineau, and I'll see you on the next one. Still empty.